a seasoned investor or just starting out, understanding why discipline is key to your financial future can make all the difference. The allure of luck in investing. It's natural to be drawn to the idea of striking it rich. We've all seen the headlines. This stock soared 1,000% in a week. Or, a small investment turned into millions overnight. These stories of overnight success are alluring and fuel the belief that all it takes is one lucky move to change your life. And while these stories are real, they represent a tiny fraction of the investing world. For every person who has made a fortune on a lucky investment, there are thousands who have lost everything by gambling on the same kind of moves. The problem is, most people focus on these success stories, thinking they're the rule, not the exception. They end up chasing risky trades, taking unnecessary chances, and eventually, burning out. This is where discipline comes into play. It separates the successful investors from the ones who gamble. The power of a disciplined approach. Unlike the randomness of luck, discipline in investing involves sticking to a well-thought-out strategy, staying consistent, and controlling emotions. The disciplined investor isn't looking for the next big thing or trying to capitalize on short-term market fluctuations. Instead, they focus on long-term goals and take a methodical approach toward their investments. In investing, discipline manifests in several ways. 1. Having a clear strategy. One of the first steps in disciplined investing is having a clear strategy. Successful investors don't wake up and decide to buy stocks based on the headlines or rumors. They have a plan, a carefully crafted roadmap of where they want to go and how they intend to get there. This plan might involve choosing specific industries, diversifying across various asset classes, or investing in companies with strong fundamentals. Whatever the strategy is, it's something they've thought through and committed to, and they don't veer from it just because of short-term noise in the market. 2. Patience is key. One of the biggest challenges for many investors is patience. It's hard to sit on your hands when you see others making quick gains. But here's the truth. Most people who make quick profits often lose them just as fast. In contrast, those who follow a disciplined, long-term approach tend to see consistent growth over time. Patience involves holding onto your investments for years, not jumping in and out based on daily market movements. It requires the strength to ignore market volatility and stick to your strategy through thick and thin. 3. Avoiding emotional decisions. Emotions are a powerful force in investing. Fear, greed, and impatience can drive people to make irrational decisions. When the market drops, it's easy to panic and sell everything in an attempt to avoid further losses. When the market is soaring, the fear of missing out, FOMO, can push you to invest in risky, overvalued assets. However, making decisions based on emotions rather than logic is a recipe for disaster. A disciplined investor doesn't act on emotions, they act on data, strategy, and rational thinking. When the market falls, they see it as an opportunity to buy at lower prices, rather than panic. When the market rises, they don't get swept up in the excitement, knowing that their strategy will continue to work for them in the long run. 4. Consistent investment over time. Another key element of discipline in investing is the practice of regular, consistent investments. Rather than waiting for the perfect moment to invest, disciplined investors commit to investing a set amount on a regular basis, whether it's weekly, monthly, or quarterly. This approach, often referred to as dollar cost averaging, helps smooth out the volatility of the market and ensures that you're always investing, regardless of market conditions. The power of consistent investment over time cannot be overstated. Even small amounts invested regularly can compound significantly over the years. The key is to stay disciplined and avoid the temptation to stop or withdraw investments when things get tough. Discipline versus luck. Why it matters. While luck can provide a lucky break, it can also lead to significant losses. The problem with relying on luck is that it's unpredictable. Even if you get lucky once, it's hard to replicate that success over and over again. In contrast, discipline is something you can control. It's the consistent application of sound principles, staying true to your strategy, and investing for the long term. Consider two hypothetical investors. Investor A takes a disciplined approach. They create a long-term strategy based on solid research, stick to it even when the market is volatile, and avoid making emotional decisions. Over time, their investments grow, and their portfolio increases in value steadily. Investor B jumps from one hot stock to the next, chasing trends and trying to time the market perfectly. They get lucky once in a while, but they also make poor decisions, lose money, and end up jumping in and out of the market without a clear strategy. Which investor do you think will come out ahead in the long run? It's not the one relying on luck, it's the one with the discipline to follow a plan and stay the course. Why luck doesn't work for long-term wealth? Even if you do get lucky, relying on luck won't build long-term wealth. Success in investing isn't about hitting a home run every time. It's about consistent, steady growth. It's about compounding your returns and making sound, well-reasoned decisions over the long haul. If you're constantly trying to hit big, you'll end up chasing fleeting opportunities and making impulsive decisions. On the other hand, disciplined investing allows you to remain focused on your goals and avoid unnecessary risk. If you're ready to take control of your financial future and start investing smartly, don't miss out on more valuable insights. Hit the like button, subscribe to the channel, and click the notification bell so you never miss a new video. Let's embark on this journey to financial success together. Stay disciplined, stay focused, and watch your investments grow.